He's advising investors to, quote, buy stocks, not the stock market. Joining me now, Post 9, Chris Harvey, Wells Fargo Securities. Welcome back.
Thanks, Scott.
So you sat down, I said, man, what a week. And you said, I've never seen anything like this in my life.
I haven't. When was the last time you saw a developed market down 12%, up 10% the next day, and the central bank saying, oops, we won't do that again? Never seen that, right? We are a little bit cautious here because this is really unusual, but what's also unusual is the similarities to 1998, right? 1998, you had large caps over small, growth over value, new economy versus old. You had long-term capital. Not quite the same as a carry trade, but for lack of a better phrase, it's when leverage went bad. And you have the Fed potentially cutting in September. A lot of similarities, a lot of volatility, so we'll see.
What do I do with that?
What do you do with that? What we're doing with that is we're still a little bit cautious. That's why we're saying, hey, I can't pound the table, buy the stock market, it's pulled back, okay, everything looks great. What we're saying is, hey, buy some stocks. Some stocks have gotten beaten up. Be cautious, but don't be too fearful, right? Because value has been created. But at the end of the day, we could have some reverberations as we go forward.
So you're cautious because you fear that there could be another shoe to drop as it relates to Japan?
That's right. We're not sure, right? When was the last time you saw more than a 10% move in a developed market and everything's just fine a couple weeks later? Nothing to see here. Everything's fine. Let's just move on. Now, what I will say is what would scare us is if the credit markets began to seize up. But the credit markets are actually in the U.S. functioning pretty well. And as long as that's true, we're going to start adding money, putting money to work.
What do you make of what certainly felt like a panic attack over the state of our own economy, never mind what's taken place with positioning in Japan?
I'm a little bit surprised by that. We think the economy is slowing down. I'm not really sure why you have a panic attack because the wheels aren't falling off the cart. But I guess because it came together with some of these other things, people got a little bit excited. Too much so. But again, we'll see.
Are you zeroed in when you say buy stocks, not the stock market, on some of the mega caps, which have come down a lot? I mean, I read through the list at the very top of the program, of course, of the pullback in most of these names.
I think mega caps are fine. One of our favorite sectors is the communication space, so you do have some mega caps in there, but it's not a particular mega cap call. What we are saying is, hey, the rotation in the summertime, you know, that was an oversold bounce. The fundamentals don't support that. But some of the fundamentals on the mega cap side, especially in the communication space, hey, that makes sense. You can make money there.
You're alluding to the Metas, the Googles, Alphabet, and Netflix.
Yeah, that's right. That's right.
Because of the dislocation?
Because of dislocation, because they have something. So quant background, one of the things that we've seen is momentum bent but didn't break in July. Typically when that occurs, it begins to re-exert itself. A lot of these companies have that momentum, and we think they'll just continue. What was good before is going to be good going forward. And again, if you look at 98, a lot of those mega caps continue to move forward.
The crazy thing is we talk about momentum. I think it was yesterday that the momentum ETF went positive on the week.
Yeah.
I mean, if I would have told you that was going to happen on Monday morning, you'd have said there's zero chance it's going to happen.
Probably zero chance.
Now, we've had a nice rebound in a lot of those names within that space.
That's right. And that's the point, is that if you have positive momentum, something good is happening. Right? We had a little bit of reversal. It got stretched. You sold it off in July. But now people are realizing, hey, the fundamentals are still good. Yeah, we got a bounce in small caps, but the underlying fundamentals in small caps, not particularly great.
So here it is. We're showing it on the screen here. It's plus 3% on the week. By the way, the comeback in the market itself is pretty remarkable, I think. Right now, the S&P for the week is flat. Yeah, okay, it's been steadily adding, trying to get a little something going here with 30 minutes to go in the trading week. Is that as shocking to you as what happened on Monday morning?
It is. We were just talking to people yesterday. If you went away for the week, you're like, hey, what happened? Nothing happened. It's all fine. So it is shocking because, again, I've never seen anything that happened in Japan before, right? And the fact that it's not reflected in the market at this point in time is incredible. But again, when you start to pull away and you start to peel away the onion, one of the things we get back to is liquidity getting to where it needs to go? Are the credit markets functioning? And the answer is yes. And that's the most important thing, I think, as we go forward in time.
I've heard some suggestions, not only today, but along the route of the recent Fed chatter, sell the first cut. It's not a don't fight the Fed across the board, just sell it. What do you make of that?
So a couple things. One, if you think the economy is really slowing down, the answer is yes. If you don't think the economy is really slowing down, the answer is no. You go back to 1995, 2 of those 6 cuts you should have sold. 4 of those 6 cuts, you made over 20%. So I don't think it's a fair, if you really think the economy is slowing down, which we don't, yeah, sell the first cut.
So you still think the Fed's going to cut for the right reason? That's the bottom line.
Yeah, I think, so we had the Fed governor, we had a number of we had some Fed communication this week.
Yeah, we did.
What are they talking about? They're talking about jobs, they're talking about inflation. I thought that was great. One of the things they weren't talking about was financial stability, which worried me a little bit. But at the end of the day, are they going to cut for the right reasons? Yes, and I don't think there's an emergency cut coming down the pipe.
Well, I mean, they didn't apparently feel the need to be as, but hysterical.
Yeah.
Like, there was talk on Monday morning of, they need to come out and do something now.
Yeah, I don't think that was necessary. I wish they would have communicated a little bit better. Hey, we're talking to our counterparts in Asia and Europe, and we're constantly in contact. Hey, we're looking at liquidity. Liquidity is getting to where it needs to go. We're looking at the credit markets. It's functioning. You didn't hear that. But yes, did they panic? No, they didn't panic, and that was the right thing to do.
All right, it's good to hear from you. Have a good weekend.
You too.
Chris Harvey.